Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about GoHealth. So GoHealth is a stock that many people have written out to me asking me for my thoughts, and it was something that has been on the radar, and I want to say thank you for everybody that kind of got in touch and remind me to talk about this investment. So GoHealth has had a bit of a difficult period. It kind of went from IPO back end of last year or so, and in the last 6 months the stock is down approximately 66%. And I want to talk about why that has happened and what investors should think about going forward. So I'm just going to jump right in here, right? So the thing is that they put out this guidance, and the quarter was actually not too bad if you think about it, right? So the top line was up 55% year over year, so that's very strong. But then you have to keep in mind that last year the growth rate was slightly subdued. So in that comparison, this Q2 right now was always going to be very, very strong. So that's one thing that I want to talk about. But more importantly, for the first half of 2021, the growth rate here is approximately 54% for the first half. So if the second half, they're pointing at the top line to be up approximately 48%, it really makes you think, okay, what is the second half growth rate going to be like? It's probably at the midpoint coming around 44% for the second half. So you're going to see substantial deceleration in the second half of the year. So obviously that's spooked investors a lot. Another thing to talk about here is that GoHealth, what is the growth rate going to be like in 2022, right? So think about this for a second. 2019, the company was growing at 190% year over year. 2020, it grew at 60%, so that's like a steep deceleration. Then 2021, at the high end, they're talking about 48%. So what is 2022 going to be looking like? Investors are too unsure, and that's why the stock is people are just selling off, because it's just too many questions. One thing that I want to talk about, okay, so they're talking about that coming into Q4, that EBITDA is going to be quite strong. But then you're seeing again that although the company is growing at the top end, let's say close to 48%, that's not translating into strong EBITDA growth on the bottom line. So investors are kind of like, okay, you're growing a lot, yes, but how is that translating into more money in my pocket? That's obviously because the company is investing quite significantly into their customer care and enrollment costs, but so you got this decelerating growth rate, you got the EBITDA not really growing at the same pace, and once the growth rate starts to even decelerate further, you might flatline on the EBITDA. So it's like, okay, should I really be getting involved here? Another thing is that, I've learned over time, just because the stock sells off doesn't immediately make it a purchase. So you don't need straight away go in full in. So cheap can always get cheaper, and that's something that's worthwhile considering at this point in time. If you compare with peers, Select Quote also trades at approximately 1 times forward sales. So the market as a whole for these insurance brokerage companies, the market is not really valuing them very highly. In any case, thank you for reaching out to me, okay? So if you want to find out what kind of stocks I'm interested in and where I'm deploying my capital right now, consider checking out my marketplace. It's called Deep Value Returns, and I'll tell you what stocks I'm looking at, and I'm not going to replace you. That's not what I'm about. I'm going to just give you 1 or 2 ideas a month to think about whether you want to get involved with or not. So I do the due diligence, and we have a chat room that's growing with like-minded investors. So don't forget to check out my marketplace. You're welcome to do a free trial to see if it suits you. Thank you very much. See you next time.